right, can you guys see my screen here?
Yes.
Yes.
Awesome. Okay. So, in case anybody missed the other classes, I'll just quickly do a recap of all the other classes that we went over. We did skip onboarding because everybody here has already been onboarded. But besides that, we went over the market basics, the different asset classes 2 days ago. Yesterday, we went over picking a broker and also opening up a demo account. I hope everybody kind of has that done. Okay. And then today, we're actually going to be going over candlesticks. And then tomorrow, we'll actually be looking at market structure. Okay. So today and tomorrow are pretty critical classes. We're also going to be taking a look at examples. And then at the end of the class, we'll go ahead and do a trade recap, just like we did yesterday. We'll do a trade recap of today's trades. Okay, so today is going to be the first look into the actual chart. Okay, we have to start somewhere, and the best place to start is the candlestick. Now, why are candlesticks important? Okay, the main reason that candlesticks are important are because they tell a story. Okay, so whenever you're looking at a chart, it's not just price going wherever it wants. It's buyers and sellers that we talked about in our second class, is there's always going to be a buyer and seller. Okay, and the way we interpret this visually is by looking at candlesticks. Okay, I'm sure you guys have seen candlesticks. Okay, and candlesticks are not the only way to see price. Okay, just so everybody knows, there are Renko charts. Okay, there are bar charts. There are line charts. And there's a few others as well. Okay. The reason we use candlesticks is because it is one of the simplest form, and that's kind of the industry standard for whenever you're looking at price visually. Okay. So here at the bottom, I have two candles. The first candle is green. Okay. So we refer to this as a bullish candlestick. Okay. And just for a little bit of context, if you ever get confused on the bullish and bearish, the reason it's called bullish, okay, and this is kind of corny, but the reason they call it bullish is because hypothetically, whenever a bull strikes its horns to hit something, it goes up. It hits the bull. Okay, here's my bull. The bull hits its not wings, sorry. It hits its horns up. Okay, and then this candlestick is called a bearish candlestick. Okay. And the reason this is called bearish is, once again, the example I'm going to give is whenever a bear swipes its paw, okay, this is my little bear, it swipes it downwards. Okay. So just to give you guys a little bit of context, that's why they call it bullish and bearish. Once again, bullish means it's going to go up, bearish means it's going to come down. Okay. And you guys can see this is the anatomy of a candlestick. Okay. Whether it be, green or red, we have the same anatomy. The only thing that changes is our opening and our closing price. Okay, so if we take a look at this example on the left here, we have a opening price on a candlestick. Okay, and once again, a candlestick is dependent on whatever time frame you're using. Okay, I have a lot of people ask me, okay, what do the daily chart, the 4 hour, the 1 hour, what do they actually mean? And what it means is for every time frame we look at, for example, if we look at the 1 hour time frame, then every single candle directs to 1 hour worth of data. Okay. If we look at the 4 hour, that means every 4 hours a new candle is going to form and it creates 4 hours worth of data. Okay. If we look at the daily, that's from market open to market close. Each candle forms and gives you the data of that daily chart. Okay, so whenever you see us talk about the 5 minute chart, that just means that we're looking at every 5 minute candle. So whenever we look at the live examples today, you guys will see candlesticks that look just like this, and you will see a bunch of them. But the higher time frame we go, okay, usually you will see a little bit less because it gets condensed. Okay, so once again, let's go back to this candlestick right here and kind of go from there. So if we're looking at a bullish candlestick chart, then we have our opening price at the bottom. Okay, so right here, if I draw a candlestick, our opening price is down here. The reason a green candle opens below, okay, and closes above is because the way I like to think about this is a staircase. Okay, you're not going to put your feet up on this staircase. Okay, unless you're a psychopath. You're not going to put your feet on a second or third staircase. You're going to take it on the first one and then the second one. Okay, your feet has to land here for you to be able to take the next step. Okay, and same thing with a candlestick, right? You step here and then you finish off over here. Okay, that's when you're going up the stairs. Okay, so what this candlestick is supposed to look like is if we have a candlestick here, and this candlestick, let's just say, is green. Okay, the next candlestick we look at is supposedly supposed to open above. Okay, so whenever this happens, we get price to move higher, and we have our opening price here, we have our closing price here. Okay, and then we if we closed over here, if we closed right over here, okay, then we have to open back up at that same exact price for us to once again take the step. Right? So that's where the stairwell comes in. Okay? The same way, if we look at it the other way around, then if you're walking down the stairs, you have to take your first step and then go down, take the second step, go down, take the third step, go down. Okay. So on a bearish candlestick, the opening price is always at the top because we look at it the other way around. Okay. For this example, we're going to look at a candlestick here, and then we're going to look at a candlestick here. Okay. And once again, our opening price on this one is going to get flipped around, and our opening price is going to be high and our closing price is going to be low. Okay. And then we're going to open over here and we're going to close down here again. Okay. So open, close. But this time, opening price, closing price, opening price, closing price, opening price, closing price. Okay. So we're slowly coming back down. Again, does that make sense to everybody? Any questions there? Okay, so we've established that every single candlestick gives us data depending on what time frame we are. Okay, time frame is a very vital key. Okay, because if you trade on too small of a time frame, you're going to be rushed to make decisions, and the smaller the time frame, the faster you have to make a decision. Okay, bigger the time frame, you get a little bit more room for error because whenever the stock does move or the candle does move, you guys will actually be able to profit a little bit more on that. Okay, and we usually look at that for swing trading. Okay, and these might be new terms for everybody, but once again, by end of this course, you guys should know all of these and you guys should be much more familiar with trading. Okay, now let's take a look at the wicks. Okay, this is called a wick. Okay, not every candle is going to have a wick. Some wicks are bigger and smaller, which we will look at into whenever we look at our charts. But for the most part, there are two wicks on a candle. Okay, we have a wick at the top and we have a wick at the bottom. Now you might be asking, where do these wicks come from and what do they mean? Okay, if we have a wick at the bottom, okay, wick at bottom equals bullish. Okay, so what this means, once again, is if this is our opening price and this is our closing price, it's saying, and this is our low and this is our high. Okay, we don't really have a high for this example, but what would end up happening if this was a green candle is, I'm going to draw it over here, is price would open here. Okay, just follow me on this candle right here. Price would open here. Price came down at one point down here. Price went all the way up, but then eventually price closed just above that level. Okay, which tells you what? That these people that were trying to make the stock go down, okay, were not strong enough. Okay, so that's just saying that the people were not strong enough. The biggest telltale that there are buyers or sellers coming in is wherever your wicks are. So if we're at a support level, which once again you guys will learn about in the next few classes, is if we are at a level and the wick looks something like this and the candle pushes up, okay, then there are more buyers stepping in here because they could not hold the price down to here. Okay. And then price gets, this is called being bought up. Okay. So price gets bought up and then we end up closing over here. Okay. Same thing for the other example that we're going to take a look at is if a wick is at the top, okay, wick at top equals bearish. Yeah, I'm trying to get you guys used to these terms. Okay. If we have a wick at the top, then that usually means that it's bearish. Okay. And what this pretty much means and what this looks like is price opened up here at this level. Okay. Price went all the way up here. Price came back down here, but then price closed somewhere around here. Okay. So all of these people that are trying to buy it up, okay, and push the price higher, they were not able to. Whatever time frame you're looking at the 4 minute and 45 seconds, 4 minutes and 55 second mark, it ended up closing down here. Okay. So all of these are going to be your trapped buyers. Okay. Those are called trapped buyers. If we have them at the bottom, they're called trapped sellers. Okay. Because they're trying to push the price lower. Okay. Any questions there about candlesticks? Okay. So that right there is kind of the anatomy of a candle, kind of how candles work at a high view, kind of top view standpoint. Now let's kind of talk about some patterns and some different types of candlesticks that you should look out for. Okay. Whenever we're trading, you are going to see a candlestick that looks like this. Okay. You're going to see a candlestick that looks like this. You're going to see a candlestick that looks something like this. And then you also might see a candlestick that looks something like this. Okay. Whenever we take a look at this, if we look and we go from left to right, here's one thing that you guys will notice is this candlestick has no wick, which means that it is strong, very, very strong. This candlestick has a wick at the top and bottom. That means there's some buying and selling pressure coming in. That means this is the second strongest. This candlestick right here has a wick at the bottom. It's still bullish, but it is the third strongest. And then this one right here, this doesn't really have a lot of buyers, but also sellers, but they ended up taking the price and moving it to a green area, we'll call it. Okay. So once again, oops. Okay. So once again, this is the strongest, this is the weakest. Why? Because of the way the wicks are. Okay. If we have to draw this the other way around, once again, we're going to have the same exact thing, but it's going to be inverted. Okay. The biggest thing is you want to kind of keep note and write down where the wicks are. You really don't want to mess up and get opposite sides of the wick. And what I mean by that is if the wick is at the top, you should know that it's bearish. If the wick is at the bottom, you should know that it's bullish. Okay, same exact example. This is just with bearish candlesticks. This is the strongest, second strongest, third strongest, and this is the fourth strongest, which means that this is the weakest. Okay, any questions there? Okay, now let's talk about candlesticks that actually matter. What should we be looking out for in the chart? Okay, before you even draw your levels, what should we be looking out for? The first thing we should be looking out for is a engulfing candlestick. Okay, this is called a engulfing. Okay, and the properties that the engulfing candlestick has is that it is usually double the size or much, much bigger than the first candlestick, which indicates once again that we just talked about that there are heavy buyers or sellers depending on which color the candlestick is. Okay, so this is very important because you might be at a key level, and once you get a engulfing, that's usually where your entry is going to be. Right? Every morning you guys see us kind of waiting for the candlesticks to open up. You guys, I always, you guys always hear me say, hey, wait for the 5 minutes to close and things like that. The reason we're waiting and the reason we want the confirmation is we usually look for an engulfing candlestick. Okay? The second thing that you guys should be looking for, okay, is a doji. A doji just looks like a little plus, and then usually it will have a candlestick behind it. Okay. Now, I'll be honest, I've only maybe traded once a doji in my whole entire trading career, but it usually signals a reversal. Okay, I'm slowly introducing terms to you guys. Reversal. Okay. What a reversal means is that a stock comes to a point and then goes the other way. It can be upside or downside. Okay, so this is called your reversal point. We will go more into this tomorrow whenever we do market structure, but this is going to be called your reversal point. Okay, so you will see this sometimes on smaller time frames. I've yet to see this on a really big time frame. Usually you won't see it on the 4 hour, anything like that, just because of how much volume is being traded. Okay, the other candlestick that I drew whenever we started that we look for, this right here is called a hammer. And I'm sure you guys can kind of see why it's called a hammer. It looks like a hammer. Okay, this is a very, very bullish candlestick, especially when this thing comes to our support area. Okay, this is extremely bullish. And I usually really like to play the next candle after here. Same thing, if we have a hammer that looks like this is called a upside down hammer. Okay, or they call it reversal hammer, whatever. But once again, it's just a hammer that's drawn the other way around. Okay, so usually what I would want price to do is I would want price to kind of come to a level, and then I would want to see a candle like this because once again, people try to push it up, but there were not enough buyers here, and then they ended up closing the price below. Okay, does everybody stand that about candlesticks? Okay, I'm going to pull up a chart here and we're actually going to start looking at the chart. Okay, I know a lot of you guys are trigger itchy to kind of start looking at charts and getting into charts, so that's kind of what we're going to do. The first thing I want to talk about is time frame. Everybody seems to kind of forget and mess this up. Okay, we're using TradingView here. We have the monthly, we have the weekly, we have the daily, the 4 hour, the 2 hour, 1 hour. The main time frames you want to use, which if you use TradingView, what you can do is you can hit this button right up here. You can come down and you want to star the 1 minute, the 3 minute, the 5 minute, the 15 minute, the 1 hour, the 4 hour. Okay. These are going to be your staple whenever you guys do trade options, stocks, whatever you trade. These are going to be the staple time frames. Most of you will be using the 5 minute and the 15 minute more than anything, and you will also add that with the 4 hour. Most of the time, you are not going to be using the 1 hour, the 3 minute, or the 1 minute, unless you're a scalper and you have a lot of experience. Okay. If you want to lose money really fast, use the 1 minute. If you want to lose money a little bit slower, use the 3 minute. Okay, and if you want to lose a lot of money, use the 1 hour. Okay, we tend to stay away from smaller time frames because it will create panic, especially if you're a first-time trader. Okay, so make sure you have these written down. I'll give you guys a minute. Okay, and now we're going to continue. So let's take a look here. I'm going to get rid of all my drawings and you guys can see. Can somebody tell me what time frame am I on? Okay, can somebody tell me what time frame I'm on?
1 hour.
1 hour, yes. So this represents, if we take a look at each of these candlesticks, they represent 1 hour worth of data. Remember, we had just gone over this. Okay. So each candlestick, if we start at 9:30, the first candlestick is done forming at 10:30. Okay. And then it goes 11:30. Okay. So whatever time frame you look at, whether it's even, whether it's odd, whatever, it will be done forming on whatever you pick it. So you guys can see there's 1, 2, 3, 4, 5, 6 candles here. Okay. If we go to the 15 minute, there's gonna be a bunch more because we're consolidating. If I go to the 1 minute, there's gonna be a bunch. Right? So once again, excuse me. Once again, Let's take a look at a closer dive into kind of what happened with AMD today. Okay, follow me here. Let's take a look at this first candle. Okay, we have a wick at the top, we have a wick at the bottom. What does that tell us? That tells us that there aren't a lot of buyers. There's also not a lot of sellers. Okay, the body is big on this candle. This, from once again, is our body. Okay, we have a big body. We opened up here and we ended up closing here. So technically, this is bearish. The candlestick is red as well. Okay, but check out these wicks. You guys see what's happening with these wicks. Okay, there's wicks on both sides, which on a big candle, especially on the 5 minute time frame or higher, I'm not a big fan of. Okay, so I don't like that candle. I'm going to not take a trade on that. Okay, let's move on. Let's look at the next candle. Red candle, but we have a small wick at the top. We have a small wick at the bottom. Once again, it's coming down, but there's still wicking happening. And I guess there were some buyers that stepped in here, so that's why they kind of held the price just a little bit. Okay. Third candle. What I usually like to do is if a candlestick looks something like this, okay, I will just in my head, I will tell myself that candlestick doesn't exist because this candlestick has no information to give me. You guys see how small the body is? You guys see how big the wicks are on both sides, okay? I completely just tell myself, okay, that candlestick doesn't even count. Then we take a look at the next candlestick. Once again, we don't have a lot of volume. This candlestick doesn't even make up for half the volume of the last candlestick. So once again, I'm not interested. Then we get the drop. Okay, this is the most bearish because it barely has any wicking. There's a tiny little wick, but for the most part, once again, these are not going to be perfect. Okay, what's one thing we know about humans is that we're the most imperfect creature, right? Emotions are all over. And remember, whenever you're looking at this chart, these are real live people that are trading. Okay. But whenever we have something, let's take a look at this right here. Okay. Whenever we take a look at this, what's one thing that we realize? Okay, right here. We realize that there isn't a lot of volume here. Okay, and the way we know, by the way, in case you don't know what volume is how much, okay, quantity-wise that a stock is being traded. It does not mean that the stock's going to go up. It does not mean the stock's going to go down. Okay, low volume does not mean that a stock is going to go down. High volume does not mean a stock is going to go up. Okay, this is just looking at, okay, how many participants are in the market right now. So if we take a look here, you guys will see we have these huge candles, but then what we end up having is, yes, we have green candles, but look how small they are. Okay, and the first thing this will tell you is, okay, one, small candles, and two, okay, where are majority of the wicks? They're at the top. Wicks at the top. Okay, so when we put two and two together and we say, okay, there's small candles and there's wicks at the top, this could be people selling, or this could be just retail, okay, just us trading and not the hedge funds like we talked about. Okay, remember that nobody has unlimited cash. When we start looking at the psychology of things, which we will go more into in the next few classes, but whenever we look into the psychology of these candlesticks, because remember, these are real live people trading, what we end up getting is there's barely any buying pressure happening. There's wicks at the top, which means that price only has one way it can go, which is down. Okay, can somebody tell me, Parag, please don't answer this. Can somebody tell me what is this candlestick called right here? We just went over it. Okay.
Engulfing candle.
Yes, so this is a engulf, which means that this is much, much bigger than these last candles that we see. So if I was a trader and I had a level here, okay, once again, we don't have any levels, but if I were to have a level here, this would be the candle I would start watching at. Okay, but I wouldn't take an entry yet because, once again, we end up having very little volume again. Okay, and then we have almost no volume here. And then the place we do pick up volume is over here. Okay, but once again, when we take a look at the candlesticks, what do they tell us? That there is no volume here because how small the bodies are. Okay, let's take a look at another example. Somebody give me a ticker, anything that you guys trade normally. Somebody,
NVIDIA.
Nvidia. Okay, thank you. Okay, so now let's take a look at Nvidia. I'm gonna go ahead and get rid of all these drawings and let's take a look at Nvidia. Okay, Nvidia. Once again, we opened up, boom, right there. We have a big wick at the bottom, small wick at the top. Automatically, this is bullish. Second candle, same thing. Okay, we have even more buying pressure. They tried to bring this price down to here, but they couldn't, and price ended up closing higher. Okay, so very bullish momentum. But then we get this candle right here once again. Look what's happening with this candle. Okay, we have a wick at the top, we have a wick at the bottom. What that tells us is that now market is kind of starting to level out and it's kind of found a fair price. Okay, and then market ends up coming back down. Now here's the interesting thing. We see all of these wicks over here, but we still decide not to take the trade because we don't have any clear price action. Okay, clear price action just means that if you are trading, let's just say a bullish setup, you want the candlesticks either to get bigger or to have smaller wicks at the opposite direction. So if this has a wick here, this has a wick here, you want this one not to have a wick and just have a wick at the bottom. Okay, so it will look something like this. And whenever we get something like this, we can usually make an assumption. And once again, the more you get your screen time, the more you guys are going to get better at this, is you're going to be able to find setups and things like that. Here's what they don't tell you, okay? We had this wick here before. You guys see how we have the wick's bottom over here, okay? Once again, trading is not perfect, but if we end up taking this bottom of this wick and we end up drawing to the right, we end up getting a level right over here. Okay, so now this is just called a pullback. Once again, I'm introducing new terms to everybody. A pullback is anytime a stock pushes up and then comes back down and then it gets bought up again. Okay, if it keeps coming down, it is not a pullback, that is a sell-off. Okay, so just small notes that you want to kind of keep. But let's take a look at what's happening here. Once again, we have this, I'm going to zoom in even more. Okay, we have this candle right here that is green that has a wick at the bottom, which means what? That there's still a little bit of selling pressure, so I don't want to get in on this candle. But then we take a look at the candle after that and we see that this is once again, what type of candle is this? Somebody else answer.
Engulfing.
Engulfing. So now we have an engulfing. Okay, we have an engulfing. Now I'm all of a sudden interested in the setup. There's the doji that we talked about, the infamous doji. Okay, once again, I don't care about this, but now all of a sudden I'm interested in this trade. Okay, and then you guys can see we have this momentum. This time, look how strong the candles are. Okay, the candles are not making tiny little things like this. Yeah, we're getting good, strong candles pushing up. Okay, but then we come up to this top. Then we kind of come up to this level right here. And what do we see? We see a lot and lots of wicking. Okay. Now, once again, trading, nothing's going to be perfect, but we had wicking over here. Okay. Which means that there were sellers up here before. Okay. Now, I want you to think about the psychology of a trader. And I want you to think whenever last time you entered a trade, what went through your mind while you were holding the trade? Okay, let's say that you buy puts here. Okay, buy puts or you short the stock, right? Shorting, once again, shorting or puts means you're betting the stock's going to go down for everybody that doesn't know yet. Okay, but let's say that we short right here. Okay, market comes down. Our emotions are we're very happy. We're barely on a drawdown. We're extremely happy. Then market goes up. Okay, a seller has two options in this given time. He can either add more or he can sell his stock. Okay? Here's the thing you don't realize. Both of those plays that this person does, if this person shorted over here, okay, whether this person adds more shorts or gets rid of his shares or his put options, no matter what he does, it's going to bring the market down. Even if it's just a tiny bit. Okay, once again, once us as retail, we don't have the power to do this, but if you think about a person that's trading a million shares or any just just food for thought, the same exact thing applies is okay, this person either is going to get screwed if this thing keeps going up, or this person is going to help fuel this movement down. Okay. And if he adds more puts, guess what? Then he's betting the stock's gonna go down even more. If he gets out of his position, then it just makes it easier for the buyers or the sellers to come in. Okay. But that's the psychology that you have to follow with these candlesticks. Remember what we said in the beginning. Okay. This is a story. Okay. As corny as that sounds, candlesticks are a story that we're getting told with market data, and we're visually seeing what's happening here. Okay. And then market comes back down. Now let's say, okay, that you didn't buy here. Let's say that you were the person that played shorts down here. Okay. And once again, this looks like, to the naked eye, this looks like a breakout zone. Okay. By the way, if you don't know what a breakout zone is, once again, I'm just putting terms in. A breakout zone just means that you think from here, price is going to go up, come back down, and then it's just going to go higher. But what ends up actually happening here is that person that tried to go long, once again, he has two options. He can either get out of the position and take a loss, or he can add a little bit more calls. Do you know what this person does? He thinks that price is going to come back down to this level over here again, and that person either adds here or other people start adding here. Price goes up just a tiny bit because that person bought, and then price goes right back down again. Okay, and whenever this same exact person that bought calls here and calls here, whenever he sells out of his position, it just fuels this fire to go even lower. Okay, so that's the type of information that you need to kind of pick up from candlesticks. Now, once again, the more time you spend on the charts and the more time you give it, the better you're going to get at kind of telling the story. Okay, let's pick another ticker, somebody. A ticker that we haven't looked at, just call one out.
Tesla.
Also, I want to add, do not average down because I was talking about that person adding. Let's say, for example, you have a buyers, right? Basically, that is trying to play a breakup. That person is gonna, in his back of his mind, he's gonna be like, you know what, it's gonna bounce at some point, so he's gonna keep on averaging down, right? So, like, which is a very bad habit, right? So you don't want to average down. Never ever do that if you're
Yep.
like, you know,
I
if you're
actually,
just starting up.
actually, I have a little thing I want to do. I'm gonna stop sharing my screen, and we're gonna actually do something together as a group. Okay, so this is gonna be a group effort. As many participants as possible. I would really like for you guys to participate. Okay, because this is just gonna help you get better as a trader. All right, I'm gonna share my screen again, and we're gonna do this little exercise. Okay, so we're on replay mode here on TradingView. Just means that we're looking back at the data, and we can actually paper trade and back test and do all those things. Okay, I'm gonna go here. Okay, and we're gonna wait for the market to open. So, okay, right there, market just opened. Okay, let's kind of analyze this candle. We have a lot of sellers coming in. Okay, we call this selling pressure. Okay, let's look at the next candle. Okay, we have selling pressure, but what's one thing that's different from this candle from the last one? Can somebody tell me?
It's smaller.
The shorter or
It's
like
It's
smaller.
much smaller, and there's a little bit of a wicking here,
Mm-hmm.
right? So this next candle should be somewhere over here, in my opinion. Okay, so let's keep playing. Nope, kept going down. Right? Now let's analyze this once over again. Okay? Huge selling pressure, smaller selling pressure, a little bit more selling pressure. Okay? Let's go to the next candle. Aha, okay? Now I want you guys to tell me, okay? What is happening down here? Somebody unmute and I want you to explain to me what you think is happening.
Some buyers are coming.
Yes, some buyers are starting to step in, and the reason and the way she got that is there's the wick at the bottom and there's no wick at the top. Okay. And once again, just looking at this candle is not going to tell you enough, but you should know. Okay. Huge red candle, smaller red candle, big red candle, smaller red candle, which means that hopefully we want price to kind of go like this. Okay. So next candle, hopefully it's going to be green. Okay, okay. So now we have a little bit more information. Now let's look at these candles right here. Okay, there is a wick at the bottom. There's another wick at the bottom again. What does this tell us now? That there is actual buyers coming in here. Okay,
Also some sellers.
yes, still there are some sellers at the top. Okay, so this is what she's getting so far from the candle. Let's keep going. Okay, boom. Okay, now, okay, this is what kind of you guys are missing whenever you guys are trading and things like that is, okay, does market have structure yet? Well, we have this zone right here. Okay, once again, we're not using support resistance. We're just looking at candlesticks today. Okay, but once again, if I were to long, I would long somewhere over here. But we're not going to long yet, okay, because of two reasons. This thing up here, once again, this candlestick is so big, and this is one thing that a lot of you guys overlook, is candlesticks have structure as well. This is one structure. This is another structure. Remember what we talked about, okay? This is the opening price. This is the closing price. This was the opening price again. Okay, so we have a closing price and an opening price at the same level. That means that there are buyers and there are sellers at the same level. Okay, so if we continue here, okay, this candlestick, I don't really want to trade it, right? Because what does this candlestick tell you? Okay, somebody that hasn't answered, hasn't talked yet, please unmute. What does this candlestick tell you?
There is no volume, just
Exactly. There are almost no buyers or sellers. Well, there were at one point. They brought it down to here. They brought it up to here. But at the end of the day, it was an undecisive candle. Undecisive just means that nobody could come to a right decision. Okay. So now we have to take a step back. Okay. A lot of selling pressure came in. Now buyers are coming in. Okay. So if you're a buyer here, you would start to be like, okay, why is nobody else buying the stock? Okay. So if you are a buyer now, okay, and let's just say that you got in at the bottom here. Let's just say that you ended up taking an entry right over here. Okay, now what ends up happening is you have to sit down and say, okay, why are we getting a candle like this? Okay, let's keep going. Okay, boom. Okay, more buyers came in. Okay, remember that level we had. Okay, you have to let the candle close. We always go over this. You have to let a candle close. Okay, we always talk about this. And now we look at this, it looks like this is pushing up to kind of go up, back up here, maybe even to high of day. Right? Let's keep going. Okay, then we have, once again, we have a little bit of selling pressure, nothing to kind of freak out about yet. Okay, then we push a little bit higher. Okay, now let's start telling the story, right? We couldn't tell a story before, but now can we tell the story? Okay, and that's my question to you guys. Can we tell the story now? Okay, sellers came in, okay, then we had some buyers coming in. Okay, we have a really good, really good buyers coming in because you see how big the candlesticks are, and they're absolutely beautiful. Okay, we're gonna keep going. Then we have a candle that has a wick at the bottom. Okay, this is what you guys are missing at this given point. Remember, we had this wick before. Okay, if we draw this wick back out, and you guys see me doing this whenever we're live trading, is I will draw levels as we go. Okay, this wick right here, we had a little bit of buyers stepping in. Those same buyers could be the ones that are trying to hold price up again. Okay, let's keep going. Okay, boom. Okay, notice how I just turned that level into kind of like a support level. Now, once again, I'm still not very confident because this could just be a retest. Okay, but we're gonna keep going here. Okay, okay, now tell me, I want somebody to unmute and tell me what is happening right here. Okay, yes, we had these buyers coming in, but what is happening now with the price? Somebody that hasn't spoke yet, please unmute.
I mean the candle is getting smaller, right?
Yes. So now we're starting to lose. This is called momentum. Okay. So this is called momentum. Momentum just means that we want to play the stock going really fast. Okay, so momentum is getting slower here. Okay, and we know that because we kind of came up, we hit this wall up here, and then we are now kind of just inside of this box. Okay, so we're inside of this box now. Once again, I'm going to draw this back over here. Okay, now let's keep going. Okay, once again, we're inside of this imaginary box that we made. Okay, now what's happening? Okay, where are those buyers that were here before? Right? I don't see a lot of them anymore. Okay, now what happens with the story? Okay, this is where this is where the villain comes in, right? And the reason we say that, once again, is we start to see wicks at the top and we're starting to see red candles. Okay, so this was bullish, but now this thing has a chance to come back down. Okay, so we're building. Once again, you guys always ask pre-market, okay, how do we know if the stock's gonna go up or down? We're building the story as we go. There's no way for you to know if this market's gonna go up or down. Okay, or we all would be sitting. None of us would be here right now. Okay, if we knew which way the market was gonna go before it even opened. Okay, but now we're building a story. Now those buyers are not present that much anymore. Okay, another confirmation. Wow, perfect, beautiful. All right, we're getting another confirmation, another candle with a wick. Okay, and now because we have this box that we just drew, right? I want you guys to follow me here. We have this box from up here back down to here. We have this little box. Okay, actually, let me draw this a little bit better here. Oops, sorry. Let me draw this box just a little bit better here. Okay, we have this box. Okay, this box I started drawing this box from this up here, this wick that we had. We had this touch right here, and now I think the next candle is gonna drop it down really fast. Okay, there we go. Okay, now how can we predict this is going to happen? Because in case you don't know, markets and candlesticks, okay, they will once again tell you the story of, okay, this right here is where buyers were active again, but where are those buyers now? Those buyers are either out of their position or they're not holding anymore. Okay, and then we kind of trickle back down. Okay, once again, somebody tell me this candlestick. What is this candlestick called? Okay, what candlestick pattern is this? Can somebody tell me? We just went over this. Okay,
In
wait.
inverse hammer.
Yes. So this is a inverse hammer, which is bearish. Okay, so now once again we're rebuilding the story, and now we have kind of another reason to drop it. Okay, once again, now now we have a little bit bigger of a story. Let's keep going. Okay, let's talk about psychology again. Buyers were down here, they pushed the price. Nobody wanted to pay above this price. Price came back down. Now there are little buyers coming in. Okay, but once again, we don't have a lot of buyers coming in. Okay, these is what we refer to as trapped buyers. Okay, and then whenever this happens, guess what? These people that bought up here and these people that bought right there when it was flat, what do you think these people are looking to do? Right? They have two options once again. They can either add more or they can sell. Okay, if they sell, it's going to help us. If they add more and this keeps coming down, it's going to benefit us. Okay? Once again, this is a hammer, but it doesn't have a lot of juice to it. Okay? Those same buyers that were here and here are coming back here again. But once again, we are not bullish yet. Okay? There isn't a lot of buying pressure coming in. Okay? Even if a stock is going down, you are still going to get some green candles because some buyers will, some idiots, as we call them, will be trying to push the stock back up again. Okay, and we've done this before, right? A stock might be going, a stock might do this, and then we might start buying at this zone too. That's completely normal. Okay, and then we get another drop. Okay, okay. We had some big buyers come in. Okay, Now let's take a look at what's happening here. We're going to bring back these zones. Okay, we have this zone here and we have this zone here now. Okay, you guys see how we took this zone back here? Okay, where there was wicking and then there was this candle right here, and we kind of have a little support there. Okay, it doesn't mean it's strong, but that's okay. Okay, because now this becomes our high of day. Right, and you guys see us kind of referring to this. This is called HOD, or our high of day. Right, but right here, guys, right here, okay, there was no volume. So I can expect price to go back up to here. Okay, doesn't mean it's going to, but this can play as a gap. Okay. Okay. What's one thing that we know about gaps? Okay. Biggest two things with gaps. I'm just going to tell you now. Okay. Gaps either fill or they act as support and resistance. Okay, which means that the top of this gap, or the bottom, sorry, and the top act as support and resistance. So this is going to be our resistance. Okay, and then if we were to break out, then this would become our support. But for right now, these both are going to be our resistance. And then if we go into this gap, this becomes a support. Okay, but once again, these candlesticks, because they had no volume, this acts, once again, we have no volume, this acts as a gap. Okay, we're going to keep playing it. Okay, we're back to our price, and then we start seeing selling pressure again. Okay, there we go. So now you guys see we're kind of coming back down again. Okay, let's take a look here. We still have this low zone. Now let's redraw our structure. We have a engulfing candle right here. Okay, we have the engulfing candle, and we also back here we ended up kind of holding that zone. So you know what I'm going to do? I'm going to take this and I'm going to draw out this zone right here. Okay, just to make sure it's not confusing to you guys, I'm going to get rid of the bottom zone, but we're going to draw a zone right here. Okay, so now what we're doing is we're targeting this low of day. Okay, I'm selling pressure. Nice. Okay, once again, we have a really small volume candle. We're just going to act like it doesn't exist, but this could be your little retest. Okay, this zone that we just made acts as a mini, okay, I'm not going to call it a supply or demand zone, but it acts as a mini supply zone. We want price to come down, we want it to retest, and then we want it to make its next move up, or next move down, sorry. Okay, boom, it's coming back into that zone. Okay, it's rejecting. Okay, we're going to skip a little. Okay, and you guys see how it kind of comes back down.
Hello?
Yes.
Why is that a mini supply zone again? Like,
Yes.
why is that?
Great question. So if we take a look at just what happened before, right? We had buyers coming in at this point. Okay, most of us enter on the 5-minute candle. That's going to be kind of your entry. What we're doing at this level is because Pravinda, do you see how these 4 candles, do you see how if you take them, then they draw this zone right here? Okay, and here I'm gonna zoom in. I'm gonna zoom in like super, just so I can kind of explain this to you guys. Okay, don't mind the replay button. Okay, but when we zoom in, let me zoom in even more. Okay, there we go. Okay, so if we look right here, we have this right here, and then we have these 2 candles right here, and we have this bottom right here. Okay, that much enough is these are so close that what we can do is we can draw something like this. Okay, and usually I would draw it to the top of this wick right here. Okay, but once again, we want a little bit more confirmation. So what we're going to do is we're going to draw this from this bottom. We're going to draw it to here, and we're going to drag it all the way to the right. When we drag this wick right here, okay, and you see how price bounced off that zone, do you? Do you see how it came down to there? Okay, so this is kind of us looking at the micro levels. If we go and we look at all the way over here, the same exact thing happened. You see that? So you see right here, once again. So these buyers that were over here, Okay, let me make this a different color just so it's not confusing. These buyers that were over here, they try to get back in and long the stock again. But then, okay, once again, I don't want to get too much into market structure today because that's for tomorrow. But if we look at this and this, okay, we're making a lower high and a lower low. Okay, and once again, you guys will learn lower high and lower low tomorrow. But for the most part, right, just us kind of trading candlesticks, we saw this sell-off happen. Okay, and then we saw a lot of sellers kind of coming in again. But here you can start seeing, if we just take a look at this right here, what happened when we came back to that zone, Prabinday? We had this very undecisive candles, these two, and then we had some buyers coming in. But let's look, okay, let's take a look at what happened over here. One sec, let me just erase all of this. Okay, when we take a look at what happened over here. Okay, follow me here. Big
Yeah.
candle, a little bit smaller candle, even smaller candle. What does that tell you? That buyers are slowly not I guess
Right.
stopping to come, right? We don't have as many buyers coming in. Okay. And then we have this candle that kind of takes out because it's actually bigger than the last candle. Then we kind of come down and we end up drawing the zone all the way to the right. Okay. And yes, it pushes up a little, but eventually it retests and then comes back down. Right? So that's the kind of story that we're trying to tell.
Also, can I add one more thing? You can
Yes.
also draw the trend line. On.
Meaning they
So
don't
thank
go
you
into
for
trend lines till tomorrow.
we're doing that. Okay, we'll do that tomorrow.
Yes.
Uh,
So, okay, let's take a look at another example. Okay, well, here, I'll just pick a stock because nobody wants to talk.
Do Apple.
do Apple your trade by as. All right, that was a good trade.
Okay, let's do Apple.
Good one.
Okay, this is going to be beautiful. Okay, so let me share my screen here. Okay, and I'm not going to do any of the fancy stuff. I'm just going to show you guys candlesticks. Okay, so let's take a look at this candlestick example again. And let's kind of do this together. Okay, market hasn't opened yet. Okay, next candle. Okay, market opened up here. Okay, once again, let's start from the top. What's happening here? Okay, we have a wick at the bottom, we have a wick at the top. What's bigger? The wick at the top. Okay, so this automatically tells us bearish. Okay, that's fine, that's fine. Okay, let's keep going. Once again, we still don't have enough information to take this trade, okay? If you short or long anything off the open, you seriously need to take a step back and reconsider. Okay, let's take a look at this candlestick. Okay, wick at the top, wick at the bottom. Once again, still nothing crazy, nothing that really catches my eye. Okay, we're gonna keep going again. Okay, now we have something to kind of work with here. Okay, this is where we can start building our foundation. Okay, we have this wick at the bottom. Whenever we wick really hard the first 30 minutes of the day, or actually, I would say the first 15 minutes, what I end up doing is I end up drawing this out. Okay, but still notice, okay, huge red candle, smaller red candle, smaller red candle, smaller red candle, which tells you that price is coming down here and it's getting absorbed. Okay, I might have completely butchered that. But this is price getting absorbed, meaning that there are buyers starting to come in. And the way we can confirm that is by looking at the bottom of this candle. But once again, we still don't have a clear indication of which way the market is going to go. Okay? And then that kind of confirms us that we still have buyers. Okay? But Prabinday, what's one thing you notice about this candle now that I want you to tell me?
That's like a engulfing candle, right?
It's not engulfing. Okay? So this is called an inside bar. Okay, an inside bar just means that it's still inside the last candle. So it's still inside the last 5 minute candle. Do you see that?
Yeah.
So that means that it still isn't strong enough to break past that wall.
Mhm.
Okay. Okay, let's keep going. Okay, now we have, once again, this is where it gets a little bit more difficult and intuition and stuff like that will start to kick in. But okay, we have wicking right here. Do you see that? So what I will do at this point, okay, is okay, I've already identified this is my low of day. Okay, LOD. And I've also identified that, okay, we're wicking over here. Why am I drawing this zone over here? Because this candle right here wicked. Okay, we kind of came up just a little bit, but now we're wicking back here. Do you see that, Prabinday? Okay, so this might be a setup I'm interested in. Okay, we reject. Okay, and I believe this is actually somewhere around here is where we actually end up taking our put play. Okay, which once again, we'll do a recap after this, but let's take a look at what's happening with the candlesticks. Okay, we have selling pressure. I don't care if the candlestick is green or red. I'm looking at the wicks. Where are there more wicks? Well, there's more wicks at the top. I'm sure you guys see that, right? And to also confirm, we have a lot of selling pressure coming off the open. And if that's not enough, what we can do is once again, we can go and draw from up here and we can draw all the way to the right and we kind of get this right here. Okay? But Prabinday, let's look at the bigger picture. If we draw from here to here, once again, actually I'm gonna draw to here. We're inside of this little box again, right? So for price to do anything, we have to move past, oops, I'm gonna get rid of that. We have to move past this box that we have, or this rectangle. Okay? Once again, we have the wick at the top. Okay? So if this person right here was buying, that person is not around anymore. Once again. Okay? Now we're at low of day. Okay? So usually probably now while I'm trading, what I would usually recommend doing is I'll draw a little box here. I want to see if this box can break. Okay? Once again, okay, this candle right here doesn't really give us that much information. Oops. This candle here still doesn't give us that much information. Next candle. Okay? Brilliant. Now I want you to tell me. Okay? We have all these wickings. We have buyers consistently trying to push the stock up, but why isn't it pushing back up? It should at least go and test back up here. Why? Because remember, we ended up drawing our little box up here. Right? We ended up drawing our box over here. Okay? Why are there not as many buyers anymore? Okay? If we were gonna push back up like this today, then there should be more buyers being active at this level. Why? Because it's at low of day. Okay, low of day usually ends up becoming, if we know it's going to reverse, usually low of day, we're going to start getting big candles like this coming in. But we don't get that yet. Okay, then what do we make? We make a new low of day. Okay, but Prabindai, the whole entire time, we have this box that we made. Remember that. Okay, I think I can go back and try to get that box back. Okay, remember this box that we made. Where is it? Okay, remember this box that we made, Prabindai. We're at the bottom of that box now. Okay, we're at the bottom of that box. We have a lot of wicks at the top on every single candle. Okay, for me, what this looks like is, okay, people are trying to buy it. Okay, I just want you to follow me here in the psychology part, is people are trying to buy this stock, but then they keep failing. People try to buy it again, and they keep failing. Right? That's what's going through my head as I'm processing this story once again. Okay, so these people, okay, there were a lot. Praveen, let's look back at this structure right here. Okay, once again, I don't want to go too much into structure today, but big green candle, small green candle, small green candle, small green candle. Right? Where are these buyers? If they're going to push the price up, where are these buyers at? Just by looking at the candlesticks. Well, to me, this looks like people are starting to get scared now. This looks like nobody wants to be in longs. Okay? And then we end up dropping. And that was the setup that we ended up kind of catching today.
Right.
Yes.
Quick
Well,
question.
Thanks.
Are we gonna go into like Patterns as well or no in this
No,
class?
I think we should
Next
skip
time?
patterns just because
Okay.
I don't use them that much and I don't think anybody was going to benefit a lot from using patterns.
No, I'm like, okay, so like not like all the patterns, but only the patterns that actually
Oh,
that we
I
know that it
think I
works.
think you joined a little bit late. We've already went over like engulfing. We went over the hammer
No, no,
time.
no, no, no.
Those.
I'm talking about like something like this, you know?
Oh no, we're
Like
not we're not
a
gonna go over that till tomorrow.
okay, all right.
So that's yeah. So what Milne is talking about is market structure. We're not gonna go into that until tomorrow. Okay. But once again, if you follow the psychology of this, okay, there's buyers trying to come in again. Okay. What are these buyers gonna do? Okay. You see how Prabinday, there's little bits of buyers. I'm fine with that. Until I see something where we get a huge candle and we start getting momentum, okay? I know that there aren't going to be any big buyers, right? And oops, let me see. It won't let me go back. But that was the setup we ended up playing on Apple today, right? Now I want to play another game with you guys. Okay, I'm gonna stop sharing my screen and I'm going to go to the bigger time frame. Okay, and we're gonna play one more game here. What's a hot stock right now? Oh, a lot of you guys have been saying hood, 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 hood.
Golf.
All right, so let's take a look at hood. Okay, we're on what hour time frame are we on? Can somebody tell me?
4 hour time frame.
Okay, great. 4 hour time frame. Okay. Okay. Whoever wants to play this game, okay, just unmute yourself and you can kind of play. Okay. Based off of this candlestick, okay, the most recent candlestick, I want you to look at this and I want you to look at price action. Okay, price action just refers to how one candlestick reacts to the another. Once again, this is all just price action. Okay, what do you think the next candle is going to be? Can somebody tell me? What do you think it's going to be? Anybody can unmute. Once again, we're just playing a.
Green,
Okay, Prague thinks it's going to be green. Prague, why?
because it's wicking from the bottom. The
Yep,
wick is longer in the bottom.
yep. Okay, so Prague thinks it's going to go up.
No,
Okay, it didn't go up. Okay, let's keep going. Okay, does anybody want to take a guess on what's going to happen with the next candle? Besides Prague, anybody else? Come on, we have 17 people here. I know you guys can talk.
That's a green one
Okay,
I'm driving, so I can't see.
Oh, you're fine. Why do you think it's gonna be green? Whoever just unmuted.
because the wick in the bottom is higher than the top one.
Okay, so you think that it's gonna go up from here. All right, okay. Let's kind of take a look at this. Okay. Keep going. Okay. Keep going. Okay. What do you think the next candle is going to do?
Red.
We're gonna flush it.
Okay, so you guys think we're gonna flush it. Okay, let's see. Okay, what do you think the next candle is going to do?
We're gonna bounce.
Okay. Milne, besides you, what do you guys think the next candle is going to do?
Green.
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 Okay. So the reason I'm showing you guys this, okay, is not to put you guys down or anything, but just based off candlesticks, we don't have enough information. I'm sure you guys saw Prague, his analysis was exactly right. Okay. Whoever else got it wrong. Your analysis is right, but we need more data to be able to trade not just candlesticks. Okay. Now, yes, candlesticks help a lot. Okay. Because if you can start identifying these zones, for example, if we start looking right here, we have a lot of wicking over here. Okay. And we have a lot of wicking down here. Okay. If we can start identifying these zones, okay. You guys see how we came down to, oops. You guys see how we came down to this zone right here and then we kind of pushed back up? Okay. Things like that are not possible without you understanding other fundamental things. or not fundamental, sorry, technical things. Okay. So in tomorrow's class, okay, just to give you guys before we go into our recaps here, in tomorrow's class, what you are going to be learning is actually, okay, how does the market structure? Okay, how does market make higher highs, higher lows? How does market actually move? How can we apply candlesticks with market structure? Because this looks confusing, okay, but we can add trend lines, we can add channels, we can add support resistance levels, all of these things to get a more better idea of where it's going to go. Okay? Candlesticks aren't enough. We need a little bit more information. Okay? And that's what you guys are going to be learning tomorrow. Is we're actually going to go into, okay, what are the setups? How do we put candlesticks together with the market structure? How do we use this to make predictive patterns? Okay, because as traders, we are trying to find patterns in this market. Okay. Any questions about today before we go into today's recaps? None?
Come on, guys. You guys, some of you guys, like, we have done similar class like this, right, on candlesticks. And I think, by touch based on structure as well. And I did talk about structure as well on 5 minutes, 15 minutes, 1 hour. There is a structure like the flying saucer structure that forms. Usually you should take that as a clue as to like what market is doing. So, but like he has gone into more in depth, right? By sharing get a chart, so we're going through each of the tickers or custody candles or where the buyers are, why the market is not pushing this and that. So it's a lot of information there. So pretty sure you guys have questions. Come on.
Yep. So so this is a setup. Once again, I didn't take this setup. I put it down there. If anybody wanted to take it, I think one or two people might have taken it, but I ended up not taking it. Okay. Let's take a look. Let's start with the 4 hour. Every morning, what I do is I will find, okay, I'll find the high, the most latest high. I will find the latest low. Okay. For me, this could have been the low, but the reason I didn't draw that as the low is because we have this support level that's holding, okay, at 648. Now, once again, are we going to go to 648 today? Probably not, but I like to leave myself a little bit of room on both sides. Okay. The second thing I do is I will go to the 1 hour time frame once I have those two levels. And what we will do is we will get this right here. Okay. We got our ATH. ATH stands for all time high. Okay. Which means that this is going to act as a zone for us. And if we go to the 15 minutes here, you guys will see how I end up drawing a zone based off of pre-market high wick. Okay, so I have this pre-market high wick. Okay, but in my head, remember, this is also all-time high. Anything above this becomes price discovery. Okay, so we have that established. Okay, well, market opens up here, and Praveen, I start drawing some of these lines throughout the day. Okay, this was not drawn at the open. This was not drawn at the open. The only two zones that were drawn at the open was this bottom zone and this top zone. Okay, this ends up becoming our demand zone. This ends up becoming our supply zone. Okay, so now we've established we have a channel. What happens inside of this channel? Okay, nothing. I don't really want to trade it. But there's 4 setups that can happen. We can either break out, retest, we can either reject, we can either bounce, or we can break down, retest, and then go lower. Those are the 4 setups that are possible in this scenario. Okay? The reason we don't take trades in the middle is because your risk to reward is going to get screwed up, and this is the number one thing that you need to focus on as a trader. Okay? You can have a 33% win rate and still be profitable. I've seen it. Okay? Now, yes, you want to go for 60% or higher, but you don't need a high win rate. You just need a really good risk to reward. Okay, which means for every dollar you're risking, you're making X amount. If we look at this trade, we had a 1 to 4 risk reward. Okay, once again, I didn't take this trade, but I called it out if anybody wanted to get in. Okay, so market kind of comes down here, and what we end up getting is, once again, I'm looking at the candlesticks and I start seeing wicking happening. Once wicking starts happening, we have a good foundation to set are levels. Okay. If you're wondering how I got my risk reward down here, because of all of these wicks happening. Okay. Price pushes up, and guys, whenever price pushes up, okay, remember we just went over this as a group. I want you to pay attention to the candlesticks. Okay. We have a candlestick with a wick at the bottom, no wick at the top. We have another really big candlestick, but then up here, we end up losing momentum. Where did it all go? Right? It can't just go into thin air. This is telling us that this price is absorbing, once again, absorption. Okay, this can either be absorption or you can just call this sellers stepping in. Okay, so we have sellers stepping in, but we know for a fact that there are no buyers above this level. Okay, once you establish that, what are we looking for? We're looking for a confirmation candle. Okay, our confirmation candle is not going to be this one. Why? Because we could go, the next candle could come here and we could go back up like this. Okay, we don't want that because our risk reward is going to get screwed up, and you never, ever, ever want to enter on a big candle like this. Okay, you will never see me enter. I'm sure you guys have seen whenever we traded Apple today, we ended up being very patient and waiting, and then we ended up kind of getting a little bit worse fill, and then we ended up scaling into our position. Right? But once again, we don't want to enter on this candle. It gives us good confirmation, but we don't have enough confirmation. But then we get another candle that has a wick at the top, and it's red again. Okay, this is the area around here where you would want to enter. Okay, so this would be the area where you want to enter. If you enter, you're probably going to get filled right around here. Let's be honest, you're not going to get filled exactly at the top. Okay, none of us are, especially with some of the brokers that we end up choosing and trading with. We're not going to get filled. Okay, so if we get filled right around the middle, okay, where are we going to set our stop loss? Well, we're going to set our stop loss right above this candle's high. Okay, so there's your stop loss level. Okay, and based off of this, what you can do now is, okay, here's my stop loss. Okay, there's my risk reward. I want a 1 to 2 minimum. Okay, 1 to 2, you have to, as a trader, say, okay, my stop loss is here. Okay, my entry is here. Is this a realistic trade? Meaning, is this above low of day? Okay, low of day, by the way, is going to be somewhere down here. Okay, is this above, is my take profit above low of day? Because you cannot make a take profit down here, because in order for us to come down here, we have to break this level first. Okay, so in this example, yes, it is good. Why? Because it's above today's low. Okay, so this trade is ready to go. Then, once again, you're going to be holding for 5, 10, 15 minutes, and then you're going to start going in profit. Okay, the other thing I really want to emphasize is you have to hold your trades. Okay, if you're not scaling into your trades, you have to hold them. The way I look at it is either two things are going to hit. Either my TP is going to hit, okay, my take profit, or my stop loss is going to hit. But if it's ranging in this zone, I'm not going to touch my trade. Because if you already have a stop loss set and you follow your trading plan, great job. But if you end up selling in the middle, I don't care if you're green, you technically end up losing for the day. Okay, because if you set your stop loss to down here and you didn't trim some on the way down, your risk reward just went from a 1 to 3 to a 1 to 1. That means that you only get to lose one more trade until you start losing more money in your account. Okay, so you guys always see me. I'm always scaling into positions. I'm always scaling out. I'm always telling you guys, pay yourself. And what we tend to do is once we are in profit, so once this thing goes down to here, we move our stop to break even. Okay, on Thinkorswim, once again, this is the easiest thing to do. Once a trade goes green, it's really hard for you to go red on a trade. Okay, and then we end up getting this drop once again. As a trader, our job is not to catch this whole entire move. You're not going to. Okay, realistically, nobody here is going to catch this whole entire move. You might catch this piece of the pie, you might catch this piece, you might catch this piece. Okay, which is, once again, that's great. But our job as a trader is not to hold from here all the way down here. Okay, it's going to be very, very difficult. Our job is, okay, there's my stop loss, there's my entry, there's my take profit. I'm going to take profit here. I might leave one runner at break even, but I'm going to take profit here. I'm not expecting this thing to drop even more. Okay, you have to get that out of your head. Because a lot of you guys, what I see happening is it goes down to take profit and then it reverses and you don't end up selling. Or you will forget to trim on the way down. Okay, you don't lock in profits until you actually sell it. Okay, so those are little problems that I'm seeing, but I think us being on voice chat, us sharing our screens and showing you guys where we have our risk reward set, all those things, they're very helpful. And you must once again wait for the candle to close. Okay, you have to let the candle close. Just because it comes, if a candle comes up to here and it doesn't close, the next candle can do this. You guys seen this happen on Nvidia. You guys seen this happen on SPY, on Apple. Okay, AMD. You guys have seen this happen. You have to let the candle close. Okay, and this once again, stop looking at your P&L when you're trading. Nobody cares how much you made. Okay, if you can make $10 a day, you can make $1,000 a day. The only difference, once again, is just you scaling into more contracts or more shares or whatever you're trading. Okay, that's the only difference between a $10 trader and a $1,000 trader. Okay, so focus on consistently making $50 a day. If you can make $50 a day, you can start making $500 a day. Okay, the only difference is going to be your account size. Okay, but that's one thing I really, really want to emphasize. You having more money in your account is not going to make you a better trader. Okay, you can start with a $500 account. You can start with a $1,000 account. By the way, this is what I would recommend you starting with. Even if you're trading shares just to get used to the platform, start off with 500 to $1,000. Okay, trade one share. Okay, but try to stay as consistent as possible, because if you can fix your risk to reward and you can fix your entries, get better execution, things like that, you're in the long run, you're gonna end up becoming a better trader. Okay, so any questions there?
Yeah, I got a question.
Yes.
So what made you want to short SPY? Because from what I remember, I'm not sure. I think the market was bullish.
Yep. So, if we look here, okay, just kind of going over this again, is we are wicking down here. Okay, so we have, this is what we will call our LOD, or our low of day. Okay, Prabinda, I think you mastered this pretty well. Is right here we have this giant candle pushing. Okay, it came down to a halfway point. This is also our imbalance. All right, so that takes it out of the loop. Okay, we have an imbalance here. So I was expecting market, honestly, I was expecting market to at least come to here. Okay, and that's kind of why I didn't really take the entry. Some of you guys caught it, but I ended up not taking this trade. Then what ends up happening is, once again, if you focus on candlesticks, I think, Bimalai, I think you joined a little bit late. But whenever we look at candlesticks, right, once again, we have wicks at the bottom, we have wicks at the bottom, but then when we come up here, all the momentum is gone. Okay? Momentum means how fast people are buying or selling, by the way. So up here, there's not a lot of buyers stepping in. Okay, if there are not a lot of buyers and we come to a key zone, which right here is our supply zone, okay, market can only go one other way, which is right back down. Okay, and Prabinde, if we take these wicks over here and we draw that little square I showed you, that's where we retest it again. You see that? And then we end up selling down. And then we end up coming back up. Guess what? We end up retesting that same exact zone. We end up coming down. We end up coming back up, retesting that same exact zone, coming back down. Right? It's all about the structure of your setup. Once again, these candlesticks are telling you a story. You have to pay attention to things like that. As a trader, you cannot miss setups like this. Okay? These are super, super simple setups that you have to be able to catch, because here we have momentum slowing down. Okay, I showed you guys order flow and stuff like that today.
मेरो क्वेसन छ एउटा सानो ब्रो.
Yes.
सो त्यो माथि पनि त्यो एउटा ठुलो के अरे त विक्स भयो नि त, त्यसले कसरी बुझ्ने चाहिँ के अरे बायरहरु कम भइरहेछ भनेर.
Right. So this candle right here is
yes,
right.
yes.
So you candle that body forget the wick body soon as the body is this tiny in my head, once again, this candle doesn't exist to me.
Okay.
This is just noise, but all the other candles, we have wicks, and look how small. The biggest thing that tells you here is look how small these candles are compared to over here. So that tells me that momentum is slowing down again.
Okay, one more question.
Yes.
Trim down गर्ने अथवा scale out गर्दाखेरि चाहिँ first scale out कहाँ गर्ने भन्नुभयो?
Okay, so whenever you're scaling a trade, 50% is usually 50% of your target is usually where I would sell 25 to 50%.
In the first target?
Yeah, half of your target. You know, now there's multiple different ways we can manage our risk, but as a beginner right now, the biggest thing I'm trying to get you guys to do is have consistent days. Because if we can have consistent, even if it's $10 a day, and you can do that every single day, you're gonna be up $300 at the end of the month, you know, or
होइन
$250.
मैले भन्न खोजेको चाहिँ स्केल आउट गर्दाखेरि कहिले काहीँ अब बिचमै गरियो भने स्टप स्टप आउट हुँदाखेरि चाहिँ मानिलिउँ टु
No, no,
कन्ट्र्याक्ट
so
लागेको छ भने दुइटै हुने भयो तर
हजुर.
स्केल आउट गर्दा चाहिँ आधी आधी गर्दाखेरि त त्यो के अरे पिएनएल मिलेन नि त त्यसो हुँदा त
Okay, so whenever so that अहिले हाम्रो stop loss यहाँ छ.
अहँ,
You know, our entry is here and our TP is here. Okay. The biggest thing I look for is okay, let's say that we come down and I exit 50% of my positions here.
mhm.
You know, if I leave this risk reward the same day, then my PNL, just like you said, it gets screwed up because now I don't have a 1 to 2 risk reward anymore.
Yes, yes.
You know, so how do we fix this problem? By moving our stop down to break even now.
Okay.
Okay. So soon as you sell half your contracts, your stop loss should go to break even because now all you're doing is you're writing the profit. Worst case scenario, those last 2 contracts, if you have 4 contracts, the last 2 sell at break even, but you still made money on the 2. But if anybody doesn't understand what he's saying, if you have this risk reward, you have a 1 to 2 risk reward, and you sell half here, your risk reward goes down to a 1 to 1. Okay, you do not want a 1 to 1. Your minimum is going to be a 1 to 2. So his question was, how do you keep your risk kind of consistent? Okay, and it's by lowering our risk as we go in profit. Okay, I will be showing you guys how to add contracts to your trades as well to scale into positions. So like we can add 2 contracts here, add another 2. Okay, this is the easiest way to make money. But once again, we're gonna go into that whenever we talk about risk management. Okay, so
Okay, thank you.
yep. Any other questions here before we get off?
Yeah, one more thing.
Yes.
So I've noticed something interesting, like you tend to always wait for the candle to close,
Yes.
before it hits the stop loss. So would you say it's better to have a mental stop loss than a hard set stop loss? Because
Yes, so
then you
okay, that is a very loaded question. Okay. For those of you that don't know what a mental stop is compared to a hard stop, okay, so a hard stop just means that you go into your broker and you say, okay, I want to sell if it goes to $2. Let's say you bought the contract at $2.20, you set a stop loss at $2. As soon as it hits $2, it sells the contract for you. A mental stop means that you never set a stop loss, but in your head you tell yourself. Okay, so Bimala, to answer your question, I'm at a point now where I just use mental stops. Okay, if you're trading really small size, you can do mental stops. But if you're trading anything 5 contracts or more, you should not be doing mental stops right now until you get much more confident. Okay, and the reason this works really well is because how many times this week have we gotten a little fake out? Okay, candle closes above the zone and then comes back down. If you have a hard stop, this one candle is enough to take you out. Okay. Sometimes, like for example, this candle, we could have wicked right here and you would have been taken out of your position. Okay, just because of this tiny little move. So to protect ourselves from that, I always wait for the candle once again to close. Okay, if the candle doesn't close above, I won't get out. If the candle doesn't close below, I won't get in. Okay, and you guys see me, I'm slowly trying to teach you guys how to get better entries as we go as well. Okay, because I just got back. I feel a little bit sloppy with my entries. Yes, we're still getting pretty good entries, but if we can get 20 to 30 cents better entries, okay, our profit margins are going to go up 30-40% per contract. Okay, so those are the little things because today Apple contracts, we bought them at $2.20. They went all the way to $3.50, I think. We ended up selling for like $2.50-ish. But at one point, these contracts were $1.99. Okay, how do we get closer to that $1.99?
It went to like over $4 by
Wow, yeah. So those things end up happening, right? But once again, we end up just playing whatever setup we're given. I'm not expecting a huge drop. I'm never going to play unless we know we have really good confirmation. We're not going to hold a stock from up here to down here. Okay? Some of you guys might be able to do that a couple of times, but doing that consistently is extremely, extremely hard. Okay, not saying it's not possible. I know some traders that do it, but for the style that we're trading and the market that we're in, it's not very easy. Okay, so once again, great question. Any other questions before we get off here?
by no. Go ahead, begin. Go ahead.
Yeah. So what do you think is the ideal time frame to look at?
Okay, great question once again. So 3 minutes and 1 minute, stay away from. I will tell you, if you're starting off, you should not be using the 1 minute or the 3 minute, especially the 1 minute. Completely stay away because you will see one little red candle and you will get out of your position. Okay. I also don't recommend scalping until you become a proficient day trader. Okay. 5 minutes and 15 minutes. You guys see me going to 15 minutes sometimes to look at a candle and then I'll go back to the 5 minutes. I'm sure you guys see me doing that on voice chat, right? The reason I do that is I want to see how the 15-minute looks. So, for example, if we're looking at SPY here, I'm going to remove everything here for tomorrow. But if we're looking at SPY here and I look at this candle, okay, and I'm looking to get an entry on this candle, I'm going to take an entry on the 5 minute. So your entry is going to be on the 5 minute candle. But I'm also going to look at the 15-minute, okay, as a confluence, which just means that I also want to make sure the 15-minute is bearish. Okay, now here's the thing. If you use the 5 minute and you go to the 15, and then you go to the hourly, and then you go to the 4 hour, okay, you're going to end up freezing up. Okay, I was telling Prabin Dai about this earlier today. Okay, you're gonna end up freezing up because you have too much information to consume. So whatever time frame you pick as your smaller time frame, for example, let's say I do the 1 minute chart. I will only look at the 3 minute chart. Okay, if I do the 5 minute chart, I will only look at the 15-minute chart. I'm not gonna go to the hourly or the 4 hour. You'll see me go to the hourly sometimes, but that's only if we're past 10:30. Okay, but you should only be sticking to two time frames. If you start doing multiple, you're gonna have time frame biased, which this is what that looks like. I'll just show you really quick. Okay, market's coming down, 15-minute. Okay, at 1 hourly, market's coming down. Okay, 2 hourly, but then we have this bounce. Okay, 4 hour. Okay, okay, 4 hour looks like it wants to bounce. You see that? Okay, daily. Okay, it looks like it's gonna push higher. So what ends up happening is you just went from a setup where market came down and you have too much data now, and now you think the market's gonna go up. Okay, so once again, you don't want to do that. Stick with two time frames. So if you're doing the 5 minute, once again, go to the 15-minute. Do not go to the 1 hour. Unless if you're doing your support resistance, supply and demand, you can. But if you're trading intraday, do not keep going and switching between multiple different time frames. Okay, it's just going to confuse you and you're going to end up losing money. Okay. Somebody else had a question?
Yes. तो execution नि भाइ
Yes.
maybe like अर्को क्लासमा पनि देखाउँदा हुन्छ टाइम भएन भने
हजुर.
जसरी अघि त्यो रिप्ले गरेको थियो नि
Uh-huh.
like can you like होस् रिप्ले देखाएर चाहिँ मैले यहाँ एक्जिट गरेँ म यहाँ आउट भयो भनेर नि
हजुर.
हो त्यस्तो देखाएर चाहिँ धेरै सजिलो हुन्थ्यो भनेर नि
Oh, okay. That makes
maybe like next class if we don't if
okay.
the, you
No, I
know
mean, we can quickly kind of go over this setup. I know now we already know what happened, but if we just look at kind of this, okay, and we just kind of go up here. Okay, so right here, okay, this candle right here, once again, we don't have enough confirmation because this next candle can go back up like this. You know, and then we have a double top. Okay, double top just means it looks like a mountain. It goes up, comes back down, goes up, and then we fall. Okay, but I don't want to be stuck in this trade for that long. You know, so the biggest thing is we look for a confirmation candle. Usually it's the second or third. Prabinday, it's always going to be your second or third off a support or resistance or a supply and demand. You know, but you never enter on the first. Never, ever, ever. Okay. The way we can fix our fills is, okay, this is going to fight everybody's psychology. But if a candle is red, you want to wait for a green candle to come. Okay, as backwards as that sounds, that's the way you're gonna get better fill. On Apple today, you know, we ended up completely abolishing Apple, but on Apple today, you guys saw this right here. Okay, at one point, this thing pushed all the way up here. I ended up adding all the way up here. Okay, I didn't get the exact top, of course. I got somewhere down here, but I ended up getting a few more contracts at a better fill. All right, so I had 3 here, or no, I had 6 here. I ended up selling a few, and then I added another 3, and then I ended up selling. Right? But for us to get better entries, we're really gonna have to focus. Remember that box drawing and stuff like that I showed you? We're gonna have to put that together with, if we're shorting, we want to enter in on a green candle. If we're longing, we want to enter in on a red candle. And it's gonna completely go past your psychology, but you have to have a strong enough edge that you believe in your system that much. Okay, and once again, that's going to get better in the next 2 weeks, 3 weeks. We should improve on that as a team. And you guys should start being able to say, okay, this worked out really well. This worked out really well. This didn't work. Okay, how do I go back? How do I fix this? Okay, so I hope that kind of answers your question. I know people that go down to smaller time frames to get better entries. I used to do that at one point, but here's the problem. If I go to the 1 minute and I try to get an entry, now my bias is going to be on the 1 minute chart. Because if you look at this 1 minute chart, this looks like it's going to bounce. I don't know about you, but this looks like it's going to bounce. And then you're going to start questioning yourself. Okay, well, 5 minute looks like this. It surely is going to bounce. Right? And those are the things that I really don't want. I want to clear up as much noise as possible. That's why I don't have a moving average. I don't have anything on my chart. You guys see, we're literally just trading supply and demand, support, resistance. Okay, and we're using some a little bit more advanced systems, like we're playing the gap fills, we're playing imbalances and stuff like that. But once again, probably I don't know if you saw this today, but look at this. There's an imbalance. You see that? Boop. We end up going back up to fill that. Pretty simple setup. Once again, I didn't catch it, but pretty simple setup. But those are the things we're looking at for. And we've been doing the same exact setup. I think we broke even one day, but we've had green last 2 weeks, which is pretty good. That's much, much, much higher than my average win rate. Okay, I'll just be honest. I don't have a 90%, 100% win rate. Okay, but we're doing really good. Okay, knock on wood. I don't want to jinx it. But yeah, that's it for today's class. Okay. Tomorrow, once again, looking at this rubric, we're going to be going into market structure and trend. So you're going to learn how to do trend lines. You're going to learn lower lows, lower highs. You're going to learn how to look across multiple different time frames. So tomorrow's class is probably going to be as long as today's, hour and a half, maybe 2 hours long. If you have questions, come in with questions. And we're also going to be looking at the different phases, accumulation, distribution, markups, markdowns, all of those things, okay? And this is going to also introduce you to a little bit of swing trading as well as day trading, okay? Because you guys see, we apply trend lines all the time, okay, to our trading. And you guys see how those work very efficiently when you add a trend line with a supply and demand zone or a support resistance. Now we have multiple different confirmations. We're able to have a little bit more confidence in the trade. All right. So I'll see you guys tomorrow. Once again, these videos will be recorded and uploaded.